SSMRV College presents video lectures and ISR initiative. SSMRV College, one of the premier institutes run by the prestigious RV group of institutions, has come up with a unique initiative to engage students at the time of this unforeseen medical emergency caused by corona outbreak. As a socially responsible institution, we would like to connect academically with students to make good the losses caused. In this connection, Salma, Assistant Professor, Department of Commerce, has posted a video on the subject Advanced Corporate Accounting, and the topic is Internal Reconstruction Part 2, second video. Please watch the video till the end and like, share with your peer groups and subscribe to our YouTube channel. Thank you. Hello everyone. This is the second video of Internal Reconstruction chapter. In the previous video, we have seen introduction and concept on internal reconstruction, and we also saw the few accounting treatments and also the few problems based on the journal entries of internal reconstruction. If you haven't watched that videos, please watch that video so that it will be helpful to solve the problems here. Now there is a question given here. In the previous video, we have done only the journal entries. We have passed the journal entries for the internal reconstruction, but here the balance sheet is also to be done. For that, the given balance sheet of PQR Limited is given here. The balance sheet is shown here with some items on the liabilities as usual on the asset side. And the following adjustments have, you can see directly here, the company has adopted after the court has given them the permission to have some internal reconstruction adjustments. So the following adjustments we have, let us understand the each and every adjustment. That is nothing but the how it is done. Reduce the present value of shares to each ₹5 fully paid is nothing but that you can see in the liability side of your balance sheet where ₹10 each was now getting reduced to 5. This is the alteration the company wanted to go. And the next, the company to issue 6,500 equity shares of ₹5. So this has been agreed upon by the company to issue the 6,000 equity shares of 5 each. For what purpose they have taken a decision only to pay off the bank overdraft, which you can see directly in the liability side of the balance sheet. And the third adjustment, that is a transaction, says here, sundry creditors agreed to forego 20% of their claims. Forego 20% is nothing but that creditors are agreeing and willing to waive off the 20% of their claims on some terms and conditions. The terms of that they just wanted to have with the company is, so in case if the company is willing to pay cash immediately, the whatever the balance with the sundry creditors has. The next, reconstruction expenses amounted to ₹1,000. These are all the expenses for doing the reconstruction and for the rearrangements, whatever the expenses incurred, for that it is ₹1,000. The directors found that the machinery is overvalued. Here the overvalued of ₹10,000 is to be readjusted, and so that it can be reduced and the value will get changed. They also decided to write off intangible assets and profit and loss account completely. So whatever the balance they get, and they, as after ascertaining all the transactions, they get the amount, consolidated amount of capital reduction. Out of that, they just wanted to have a write off to the intangible assets. Intangible assets in the given as a goodwill. Another one is an preliminary expenses. So these are nothing but that they just wanted to have write-off. And along with that profit and loss account completely. That is nothing but whatever is given in your asset side, that is 20,800 to be write-off completely. So let us go to pass the journal entries. Now we have understood the following transactions and we can just pass the necessary journal entries. We have gone through the adjustments in the previous slide. Now let us move on to pass the necessary journal entries in the books of PQR Limited. As we had seen in our first adjustment, so how the reduction is done towards the equity share capital. So equity share capital, as usual, first we have to show this which is shown in the balance sheet. We are extracting this from the balance sheet, that is 10,000 equities of 10 each. So where it comes to 1 lakh, we have shown in the debit side of our journal entries. And new equity share capital is now has got reduced to 10,000 equities of 5 each. So it comes to 50,000. That means whatever the adjustment as per the court order, so we have made that reduction in the share capital by showing that 10,000 equities of 5 each. So the balance, whatever the balance remain from the old equity share capital with the new equity share capital, the balance is showing 50,000. That is to be transferred to capital reduction account. So we have shown this in the credit by showing the credit entry to capital reduction account. So narration is also shown over there. The paid up value existing shares of reduced to 5 each. So this is done for the equity share capital. Now let us move on to the second adjustment. It is showing that the bank overdraft. Now the company is willing to issue 6,500 equity shares of 5 each. For what purpose is done, in the sense to whatever they due with the bank overdraft, they just wanted to clear off. So now by issuing that equity share, so they have received it 32,500, where we have already credited by showing as equity share capital 6,500 into 5. Now the bank overdraft is debited 15,425, which this figure we have extracted from the balance sheet and it is cleared off now. So now out of 32,500, after making the payment, that is in 15,425, remaining balance we are keeping that in our bank. So that is being shown as a bank account. So bank overdraft is cleared and then 17,075 is now with the bank. Now let us move on to the third entry, that is nothing but the creditors forego 20% of their claims. So directly we are showing that creditors account debtor, that is for rupees 3,000, it comes to 3,000 and then to capital reduction account 3,000. So this is the entry, direct entry to be passed for the adjustment what we are doing in internal reconstruction of the company. And the next move on to the expenses. There in the adjustment it is given that they have incurred the reconstruction expenses account. So that is to be debited. So this is paid towards the reconstruction expenses. So it is to be debited for 1,000 rupees and to bank it is 1,000. So narration we have already shown there being reconstruction expenses paid. These are all the 4 adjustments we have done. Last entry is whatever the reconstruction, that is an amount we have collected, and that total we have to show as an reconstruction account, that comes to 53,000, nothing but first 50,000 from the first journal entry, Second is 3,000. So 53,000 we have now collected towards the reconstruction after undergoing all the adjustments and the alterations. This is according to the company's terms and conditions. This is to be write-off, and then first important adjustment towards the machinery is overvalued. So 10,000 is overvalued, that we have to clear it off against the reconstruction amount. And profit and loss account, it is said that profit and loss account to be write off completely. So we are showing, and we have extracted this figure from the balance sheet, 20,800. And to bank, this is nothing but that the expenses what we had paid towards the reconstruction expenses, this amount is also to be adjusted towards the reconstruction balance. And then the goodwill. So the goodwill, what this figure 10,000 we have extracted from the balance sheet, as we have to write off as per the court order. The alteration towards the goodwill also is to be done. Then preliminary expenses, as it is shown in your balance sheet, it is also to be write off. So 1,500, this figure is also extracted from the balance sheet. So these are all the items which is to be adjusted towards the reconstruction of 53,000. So if you add the amount what you have adjusted, 10,000, 20,800, 1,000, 10,000 and 1,500, and you deduct this amount with the 53,000, you will get the balance of 9,700. So as our terms and condition, any balance left out, it is to be transferred to the capital reserve account. So now at the end we are showing to capital reserve account 9,700. These are all the general entries as per the adjustments given in the books of PQR Limited. We have done this, and let us move on to the balance sheet. That is nothing but the reconstruction balance sheet. Reconstructed balance sheet is nothing but that once if you have made all the adjustments and the alteration in your journal entries, then we will get the new figure, and all that changes we have to show in the balance sheet. So let us move on to do the balance sheet. Now let us move on to the reconstructed balance sheet. Reconstructed balance sheet is nothing but after making all the arrangements, necessary arrangements we have done in our company, then later what the new figures we have arrived at, so that we are going to show in our balance sheet, is called as reconstructed balance sheet. So now, as usual, the liabilities and assets has been shown in our balance sheet, in the reconstructed balance sheet, like how earlier balance sheet is given. Now in the first equity shares, 16,500 equity shares of rupees 5 each. Here 5 each is, I think we have understood that it is been reduced, so it is shown as rupees 5 each. But this 16,500, earlier balance sheet it was 10,000 equity. How it has increased in the sense as 6,500 equities have been issued to clear off our bank overdraft. So 10,000 plus 6,500, it has come here in the new reconstructed balance sheet, 16,500, it comes to 82,500. Next, capital reserve. This amount we have arrived at after the balance left out, doing all rearrangements. So it is now 9,700, which we had already transferred towards the capital reserve account. So we are showing this as in the balance sheet. Creditors. Here creditors in the earlier balance sheet shown as 15,000. It has been reduced to 20% as per the willingness of the creditors to waive off the 20%. So out of 15,000 is been reduced 20%. It comes to 12,000. So these are all the items to be shown on the balance sheet, reconstructed balance sheet under liabilities side, and the amount comes to 1,04,200.
Now asset side, asset first building is shown 20,500. This amount we have extracted from the balance sheet as there is a no adjustment or rearrangement is done towards this building. Now machinery we have an adjustment saying that it is been overvalued, so the amount is to be reduced. Overvalued amount was 10,000, so it is been deducted out of 50,850 and showing in our amount column 40,850. So it is nothing but the, now we are showing the actual amount, or we also can say the revalued amount. Next, stock. Stock also we have extracted the figure 10,275 from the balance sheet as there is a no rearrangement is done or any alteration is made towards this stock. Debtors also is shown as 15,000 which is extracted from the balance sheet as there is a no adjustment or rearrangement is done toward this debtors. Now let us move on to the cash. It is shown in your earlier balance sheet 1,500. We are showing here as in 1,000 minus. Why this 1,000 is now being reduced out of this 1,500 in the sense because 1,000 is incurred towards the reconstruction expenses. So this is to be reduced and then we are adding another figure that is 17,775 which we have arrived at and we are after ascertaining and after the payment is made towards the bank overdraft. Against that we had issued equities of 6,500. So that amount balance what we have arrived at. So this amount we are showing here as 17,075. The total comes to 17,575. So all the asset side now the total what we have after ascertaining the asset side with considering and all the adjustments 1,04,200. So now our balance sheet liabilities and the asset side has shown the all new figures which we have made the adjustments and rearrangement is been done and our reconstructed balance sheet is now ready.
Now let us move on to the next question where the balance sheet of Amar and Company is given here. As usual, the liabilities and the assets of the company, this is nothing but the existing balance sheet is shown. Now we have to make the reconstruction of this company by undergoing the following adjustments which is approved by the court. So here, as in the previous problem, we have done all the adjustments. So here also they are made with whatever the existing balance sheet is showing, to that few reductions they make and few alteration and rearrangements. So let us quickly we move on to the how the reduction is done. So in towards the equity shares, from 10 each to 5 each is reduced, and then preference shares, it was earlier shown 10 each to now it is been reduced to rupees 6 per share, that is fully paid. And another, there is an adjustment towards the preference shares. So in the earlier existing balance sheet, for rupees 5 paid is now reduced to rupees 3. So these are the very important things to be focused in our adjustments, what is given in your balance sheet and what is to be reduced. And then next, the debenture holders agree to forego. As you know that forego is nothing but they are willing to waive off the interest here whichever is due to the shareholders. That is nothing but the debenture holders. And the company has now, meantime, they have recovered some damages, that is an amount toward the damage, a sum of rupees 74,000. So these 74,000 they just wanted to keep and transfer to the capital reduction account so that the later they can write off their accumulated losses. So this we have to understand that why this 74,000 is created. The reconstruction expenses, as you know that in the previous problem also we have understood that this
for the reconstruction purpose, whatever the expenses they incurred, it has come to 7,250. So by seeing this, now we just move on to the journal entries. Let us pass on the necessary journal entries based on these adjustments made. Now we have come to the journal entries. Let us pass on the journal entries. We have understood the adjustments given in the previous slide. Now here equity share capital, as we have given as an old, nothing but that we have extracted this from the existing balance sheet. So it is showing to 2 lakhs. So now the new equity what we have made the changes, that is to be reduced for 5, nothing but it is from the 10 to 5 is reduced, it has come to around 1 lakh rupees. So and remaining balance from 2 lakh and the new equity is 1 lakh. So the balance we are now have arrived 1 lakh rupees, that is to be transferred towards the capital reduction account. So we have already been credited over there showing 1 lakh rupees. So the narration is also shown over there, from 10 to 5 is reduced. The changes have been made. Now next move on to the preference share capital. So 7% preference share capital is now considered as an old figure, that is 1,50,000, which we have extracted from the balance sheet. And the new changes what they have asked in the adjustment. So they are asking to do the reduction towards that preference share capital from 10 each to 6. Now the 6, if you multiply the number of preference shares with the 6 paid up, it comes to 90,000. So their figure, first old preference share capital 1,50,000 and now new which has been reduced and agreed upon to have the reduction 90,000. If you minus, you will get one another figure and 60,000 balance figure, which is to be directly transferred to the capital reduction account. Now we have shown as an in a credit entry to capital reduction account 60,000. And the same similar transaction what we have seen in our adjustment, that is preference share capital old 65,000 and the new which is to be reduced it for 3 paid up, from 5 to 3 it is been reduced, so it comes to 39,000 which is to be credited. So old entry is now we have been debited, which we have extracted from our balance sheet, and the preference share capital which has been now made an reduction of for rupees 3. And then remaining whatever the balance out of this 65,000, we have reduced it 39,000 and the balance is showing 26,000, so which we have directly transferred to the capital reduction account by showing to the credit entry to capital reduction account 26,000. And the narration has given the complete information so that you can refer and you will understand the changes from the balance sheet, earlier balance sheet, to the adjustments. Now next, debenture holders have waived off the whatever the interest due with them. So the general entry is to be passed and debenture interest due is to be debited, that is an debenture interest due account data 19,500 and directly it is been transferred to the capital reduction account, and here the transfer to the capital reduction account directly 19,500. So now this is been waived off. Now this is the next damages recover. This is nothing but the amount received on some damages, that amount for around 74,000 there are. This amount they just wanted to transfer the capital reduction account. Reason in the sense they just wanted to utilize this amount towards some write-off or towards the accumulated losses. So the journal entry is to be passed to show this 74,000 is being received towards the damages and then it has been recovered. So by showing this in the debit, damages recovered account data 74,000 and same 74,000 is transferred to capital reduction account. Now next, reconstruction expenses. For making the adjustments and reconstruction, whatever the expenses they have incurred, that is for rupees 7,250. So reconstruction expenses account data 7,250 to bank account 7,250. So this is nothing but the payment made towards the reconstruction expenses. And the next, so now this capital reduction account is now being shown to 2,79,500. How this amount has been arrived in the sense, we have to add all the capital reduction account is shown in the journal entries. Those figures we have to keep adding it, like 1 lakh rupees. In the second, that is 60,000, and another amount what we have received it, and towards that capital reduction is 26,000. And the next we have is 19,500 towards the debenture interest. And the next is whatever is recovered from the damages is 74,000. If you add all such amounts, now you will arrive the figure 2,79,500, which is to be utilized for the purpose of, that is an utilization of capital reduction towards the writing of accumulated losses, like to profit and loss account. We have shown it to the credit as this is a loss. 1,75,500 is this figure we have extracted from the balance sheet. And the goodwill, there is a no adjustment, so directly we are showing that as in the balance sheet is shown 80,000. And this is the reconstruction expenses was we have incurred out of this capital, that is a reconstruction expenses 7,250. That is also to be shown as a reconstruction expenses account. And the whatever the balance remain, that is in balance left out after undergoing all the accumulated losses to write off. So the balance remaining is to be transferred to the capital reserve. So that we have shown the capital reserve as 16,750. So that narration is also shown, which you can understand that the amount of capital reduction is now adjusted towards the accumulated losses like goodwill, profit and loss account, and then balance is transferred to the capital reserve account. Hope you have understood the general entries, and became easy for you understanding the first problem and the second problem. Let us move on to the balance sheet of the new figures to be shown, and then that balance sheet is called as a reconstructed balance sheet. Now let us prepare a reconstructed balance sheet. So reconstructed balance sheet, as you all know that here we do the balance sheet as per the new figures and the new adjustment which we have already done, and we have already passed the general entries. Seeing those general entries, now we have to have a reconstructed balance sheet. So in the equity and liabilities, that is nothing but the liabilities and asset. This is a vertical balance sheet what we have prepared. And then here, so as usual that 20,000 equity shares of 10 each. So it is an earlier balance sheet. So 5 is reduced. So we had shown in our passing the journal entries for the new equity share is 1 lakh. And same for the new preference shares which has been reduced to 6 paid up is now shown as 90,000. And another preference share what we have been reduced to 3 paid up, that is shown as 39,000. So these are the adjustments and the alteration made for the share capital. And then under this capital reserve, we have the capital reserve of rupees 16,750 is shown already there. And the next, under the non-current liabilities, we have as shown in the balance sheet earlier and existing balance sheet, 5% debentures same as 1,50,000, and another 8% debentures for rupees 3 lakh. And then under sundry creditors, so amount what we the figure 4,50,000 we have extracted from the balance sheet, and same we have shown here as 55,000. The total comes to 11,45,750. So all adjustments for the liabilities is shown on the liabilities side and with the total 11,45,750. Now on the asset side, so fixed assets like building, we can see in the balance sheet, and the same figure we are taking and we are showing here in the amount column 1,75,000, as there was no adjustment and rearrangement is done towards this asset. And the machinery, same as like machinery is 3,25,000 is shown over there. Patents 54,000. These are all the figures we are extracted from the balance sheet. In under our reconstructed, we are adjusting this as there was no rearrangement or reduction or any alteration was made. So now furniture 15,000. Investments were shown there in the balance sheet, so we are also showing here as same figure 75,000. Sundry debtors 4,15,000, and then cash 2,000, and here only in the bank 18,000 plus 74,000 what we have received towards our damage recovered. So that we are showing here 74,000 plus 7,250. So the total comes to 84,750. So now all this whatever in the balance sheet is shown, the same figure we have now showing in this reconstructed balance sheet as well, so that the total comes to 11,45,750. Hope you have understood the adjustment, journal entries, and also the balance sheet, how the new balance sheet is to be framed and restructured to show that the present balance sheet is with the adjustments. Now let us move on to the another problem, similar problem, where we have to pass the journal entries and also the balance sheet. That is nothing but we need to prepare the reconstructed balance sheet for a given problem. Here there is a balance sheet of Satya Company Limited is shown as liabilities and assets, and the company is undergoing with the following reconstruction, which was adopted as per the instruction and the court order. So here we have given the few adjustments here with some changes, like for the first preference shares from 10 each, it has been reduced to 8, and for the equity shares, there it is shown 10 each, but we have reduced it, the company has reduced it for 5 each. And the next is creditors agree to forego rupees 8,000. I think you hope you have understood that the company and then how the company is willing to now going with the adjustments with the creditors agreed upon to forego, and that is nothing but the waive of rupees 8,000. And then amount, the next adjustment is the amount whatever the available amount they'll get, that amount they wanted to utilize to write off the some accumulated losses and also with towards the some nominal assets and also to goodwill. Now let us move on to pass the necessary journal entries. Now we can see here the few journal entries based on the adjustments given in our question. Now we have to pass the journal entries in the books of Satya Company Limited with the following adjustments. Now for 8% preference share capital account, nothing but 5,000 preference shares for rupees 10 each. This we are being taking from the balance sheet. Old figure, that is 50,000. We are showing this on the debit side 50,000, and the new preference share capital which is reduced to 8 for 5,000 preference shares. 5,000 into 8, it comes to 40,000. Now we have already cleared with the old preference share capital and the new preference share capital, and the balance 10,000 is transferred to capital reduction account. Now let us move on to the Next alteration for the equity share capital. So equity share capital for 5,000 into 10 each, which is in balance sheet shown. The figure we are showing here is 50,000. After you multiply 5,000 into 10 each, it comes to 50,000. This is nothing but the old equity share capital shown in your balance sheet. And the new equity, what the changes have been made, and they are now reduced it for 5 from 10 to 5. So 5,000 into 5, it is now shown as 25,000. So to equity share capital, new is shown as 25,000. So from the old equity 50,000, and we just reduced it 25,000 of your new equity, the balance comes to 25,000, which is to be directly transferred to capital reduction account. Now here creditors forego rupees 8,000 for their claims. So we have to pass a journal entry saying that creditors is to be debited, creditors account debtor 8,000, and we are transferring the same figure to the capital reduction account, that is nothing but 8,000. Now we have already accumulated and generated the capital reduction account. Now this is to be utilized towards the write-off nominal assets, and the balance they are asking that if any balance, if it remains after adjusting to the write-off, so that is to be adjusted towards the goodwill. So let us see whether the balance remain or not. So capital reduction comes to 43,000. As you know, the 10,000 from the preference share capital, and equity share capital we have transferred 25,000, and 8,000 where the creditors were willing to waive off 8,000. So total comes to 43,000 total capital reduction we have to adjust and to write off the accumulated losses. So this is now done against preliminary expenses 3,000. This figure we have extracted from the balance sheet, and the profit and loss account. The same figure, that is 2,500, is shown here against what is extracted from the balance sheet. So now we have only the two different nominal assets in our balance sheet. So we have shown these two figures, that is in towards preliminary expenses and profit and loss account. After showing this, that is 3,000 and 2,500, it comes to 5,500. If we deduct this from 43,000, the balance remains 37,500. So the adjustment says that if any balance remain, that can be easily adjusted to the towards goodwill. So then the balance sheet, the goodwill is shown 1 lakh. So the whole amount is uh, impossible for to write off. So we are just be transferring only the balance figure 37,500 towards goodwill. Now hope you have understood the general entries based on the adjustments given. Let us move on to the reconstructed balance sheet based on these general entries. Now we have to prepare reconstructed balance sheet. Now we will start with our share capital, like new changes whatever is done. So we are going to show this in our new balance sheet, that is nothing but the reconstructed balance sheet. So 5,000 equity shares of 10 each were shown in your earlier balance sheet, but our changes have been made for 5. So we will show this as 5 in our balance sheet. It comes to 25,000, and then 5,000 8% preference share of rupees 8 each. Earlier it was 10, so reduced to 8, so it comes to 40,000. We have shown it this under the liability side, and then these are the adjustments for the share capital. Now creditors now we are showing here 10,000, as in your balance sheet the amount is showing 18,000. So 8,000 is on the willingness of the creditors. was waived off. So now remaining balance 10,000 we are showing towards the creditors. Next, bank overdraft. The bank overdrafts we are showing 20,000 which we have extracted from the balance sheet as there is no adjustment or any alteration made towards this. Now let us move on to the assets. Under this, the goodwill. Goodwill we are showing here 62,500. How we have arrived this amount in the sense, in your earlier balance sheet the goodwill is shown 1 lakh rupees. Out of that we have already been adjusted towards goodwill 37,500. So 1 lakh minus 37,500, it comes to 62,500. So this is shown here in our reconstructed balance sheet with a new figure towards goodwill. Now building 4,000, same figure extracted from the balance sheet as there is a no alteration or adjustment is made. Now plant 5,000, debtors shown same as 1,200 and stock is also shown the full figure 22,000 as this item doesn't have any kind of rearrangement. So as the figure shown in the earlier balance sheet is shown here and the cash is also rupees 300. So only with the goodwill there was the adjustment. It comes the liabilities total 95,000 and now assets total also shows 95,000. So now our new and reconstructed balance sheet with all adjustments and alterations done. So I think hope you have understood this balance sheet.
Hope I have made things clear. Practice these problems which will help you to solve questions from this chapter in your examination. Thank you for watching.